Everybody, this is Paul making a quick YouTube video here since it's the end of the month, and it's a pretty interesting period of time here. I'll just go over a few things that are going on right now in the market, just any changes to my portfolio, that kind of stuff. So the changes that I made in the month of November were related mostly just to any kind of like tech exposure that I have. Because as Powell, um, the Federal Reserve Chairman, stated today, they're still going to taper, which means inflation. So even though you have the thing with the virus going on, and we're still waiting for data on, if the vaccine effectiveness, that kind of thing, you can tell that's kind of affecting the market right now. Behind the scenes, what you're looking at right here is a very telling story about what's actually going on. And you see this going up right here. This implies, so this part right here could be fear or whatever, but this part right here, the sell-off in the 2 year, kind of tells you what's really going on in behind the scenes. So you have some Omicron, some virus things going on there, but this sell-off tells you that the Federal Reserve still plans on tapering and then possibly hiking as expected. And the market is sending the signal they don't like that. They want, I guess, a delay of some type, possibly, or some kind of language to say, oh, we'll hold off. But the problem is that inflation isn't holding off. And if the virus actually does become bad, and they start talking about lockdowns, especially like say Japan or like some other countries, the supply chain issues could get worse when they were starting to get better. So that's a major problem. So the Federal Reserve has to figure out a way to deal with. They've already basically, he literally said today they're dropping the word transitory. So the COVID trade, as they call it, like that certain basket of stocks like Zoom, that kind of stuff you would expect to be up. If you look around, the Nasdaq's down. Well, if it was a COVID trade, like if it was COVID-induced panic, you would have the Nasdaq doing a little better. You would get more game studios doing better, more things like Apple, Microsoft, Zoom, those kind of things doing better. But if you look at what's going on right now, it's not doing that. It's kind of doing something a little different. So what's going on is the market is kind of reacting to two different things going on at once. At the end of November, it started to react to the Fed very clearly stating that they were going to taper, which means they weren't going to buy bonds anymore, and that will affect the housing market because that means rates will go up. But then also people had started to price in a rate hike. Well, all of a sudden you get the virus news on top of that, and that kind of masks what's already going on. So you can kind of see it here if you go into the performance. So the market had already kind of started to flatten out here. And as you go into November, after you had this recovery in October, obviously look at this massive recovery plus some. And I'm just looking at the S&P right now. I mean, my portfolio is down there and it's tracking either any of these really. But if you see, it went up really big in October as earnings came in much, much better, flattened out, and then as the word of the taper and impossibility of rates started to dip. Now, it did start to recover at the end of October because the supply chain issues, like, the Fed might not have to hike as much because the supply chain, like the amount of ships coming into ports was starting to get smoother, and, you kind of started to see prices going down. But then once you get the virus news, it's going to tank, it's going to go down another 2%. So it's going to kind of shave off. So if, you say if you were up, if it was up, what are we here, 16% here, and then all of a sudden it's up 25, these huge gains in October, some of this is going to get reined back in as people take profits towards the end of the year, that kind of stuff. So there's room for this to fall. So when does it get to like oversold? Um, we might be getting there. There's a few economists that kind of post about this. Um, you're kind of seeing the conditions for something considered oversold. That's when all of the money that's kind of taken profits last week and yesterday for sure, they all jump back in and start buying these dips because you can kind of see um, just the different things. Like you can just kind of see like just stocks that are starting to get kind of like much lower than they were. So that's kind of what's I think is going to go on here in December. It could happen as early as tomorrow, but once you get any kind of news about vaccine effectiveness, one way or the other, if you get vaccine effectiveness and it says, there's a little bit, but it's not going to really affect anything, I think the market's going to pop pretty heavily. So on days like today, what do I watch? As crazy as it sounds, I don't watch the dollar amount. I really don't care what the dollar amount is. I watch the percent amount. Once you get up to certain amounts invested, you have to start watching percentages. You can't watch the dollar amount. It'll make it go crazy. You think like, that's like somebody's rent or mortgage payment right there. So you just have to watch the percentages and then realize, even though that's down, 2% still for the year. So this will probably end up saying 13% tomorrow, but I'm still at 13% for the year. Um, so that's kind of what I'm watching there. So what did I do in November? Um, so I reduced QYLD right here. I took a pretty large chunk out of that. I added Target back. I'm gonna keep Target right here now because I needed something that paid out in December and also was a very good stock. And then also saw the Target was selling off too, so it had a very big dip. So I bought the dip on that, and then also Walmart I added that, and then I added some various position into like say energy and that kind of thing. So why did I do the QYLD? It's very simple. Um, the Nasdaq, as you can see right now, is a perfect example. Should be up. This is if there was a COVID trade going on, the Nasdaq should be up. But the problem is with the expectation that rates are going to go back up, these positions are all going to get squeezed right here. So all of these positions are going to get squeezed out. So what that means is basically a lot of this is going to reverse. So that's why I still have my regions position, my bank positions, that kind of stuff. I'm expecting rates to go back up. And yesterday was kind of a good example until the Moderna CEO opened his mouth. But you can kind of get the general idea. I think rates are still going to go up. The Fed is not going to change their course because inflation is still out there. By the time the Fed catches up, maybe inflation will go back down. But as it stands right now, that's kind of where we're at. So I'm only adding to positions right now. I think I sold one share of Kimberly-Clark when it was up the other day on Friday, and everything else was down, just so I can buy maybe like some things that had dipped a little bit. But outside of that, mostly just been adding to positions. For December, what do I expect? So if I had to look at December, maybe go what I expect. Depends on the data. I think we'll get the vaccine effectiveness data here pretty soon. Probably a little bit of a relief rally tomorrow. They tend to get rallies. You'll see by the end of the day. Like I said, this has been all over the place. Like today, it was already down 1,200. Now it's only down. Well, it's down 800 now. So it's going to jump around a lot. Probably a lot of weakness until you get a lot of data showing how consumers are reacting to this news, if they're backing off their trading or if they're going back online or if you see more shutdowns, that kind of thing. Expectation is that cases will spike, as you're seeing in South Africa right now. Once it becomes the dominant strain, it starts to replace alpha, beta, delta, whatever's out there. So you'll see cases spike among unvaccinated people. You might have some vaccinated people thrown in there, but you have to wait to see what the vaccine effectiveness is. They're going to recommend boosters, which is why you're seeing Pfizer just completely defy the market right now and not even remotely care. Could have just put 100% of my portfolio into Pfizer and been doing pretty good, but so here's Pfizer right here. And that's because Pfizer did the smart thing. So the reason why Pfizer's up and Moderna's getting, trounced right now or kicked, where was it? It was down earlier. It might have started to recover a little bit, but the reason why Moderna was down was because the CEO came out and said, "Well, we're not too sure if our current vaccine is that effective against, the new virus." And he said that with no data. So he must either have access to something or something's going on. But Pfizer said, "No, we need 2 weeks to review everything to get you an answer. We'll get you the clinical data." This is the difference between the two stocks. That's why one's tanking right now, and that's why the other one's up by a lot. So, yeah, here it is, down by 4.5%, and you go over here to Pfizer, and they're up 2.5% or so. So that's what's going on there. But Pfizer's really breaking out of one hell of a range that it's been in for a while. So I got it at 43, and it's at 53. And they're supposed to have earnings here pretty soon, so I'm hoping that they're actually going to raise their dividend, which they will need to do by a pretty significant amount. It's expected they're going to raise their dividend by between 10 and 15%, depending on where you look at. So that's where we're at right now. So we're just going to have to watch that. But like I said, right now, just currently only adding to positions. And then I guess one of my New Year's resolutions for 2022 is to not sell any positions. So I'm going to end up titling this position, sacrificing yield for quality, I guess is one way to put it. But the sacrificing yield would be right here on the QYLD. So if I go over here to estimated income, it's at 2418. And if you look at that, where I'm at now, which is 2553, which is the IRA and the regular portfolio dividend combined, you can see the difference here. So last month, so this is the 2553 is more in line with October. As you can see, I had this here and then I had this jump. That's because I took advantage of the tech trade in October, but now I got out of it. Or the tech re-rally, I guess it was in October, but I sold a lot of those stocks, got out of QYLD, that much exposure, and then just kind of went back into the normal pattern as if this had never happened right here. But I will definitely keep track of that. I don't see that changing anytime soon, so pretty much this is kind of the portfolio I'm going to go with for the moment going into 2022, unless something dramatically changes. The only thing I could see offloading might be like maybe Ford or something if we're starting to go into a recession. Like if there's a recession way sooner than say 2024 or something like that, or something happens that just causes a massive recession, like the Fed hikes too fast or something. Like it just could be anything. But that could be really the only thing I could see dumping out of. Right now, if I'm holding through this, I'm pretty much going to hold through anything. So that's where the portfolio's at now. One other thing I did want to eventually add, I made that video on iBonds. I'm going to eventually add one of those, and that'll give me something to put into this column, since I haven't been able to put CDs in here in a few years. So I might change the name of this column right here to something like bonds, or I don't even know what I could call it treasuries. But yeah, so that would be something I can have here finally again, just to have some kind of like little thing going on there so the discharge's not always blank. But I'm hoping to look at that pretty soon. I want to put maybe 1,000 into there. So that's one little plan I have going on. So I made that iBond video where I went over like those types of things, what those are, how those gain, how they're taxed, that kind of just a very basic overview of them. But I will definitely post an update whenever I do that, and then post a video or post my monthly video whenever I get those updates. But yeah, just let me know what you think. Leave any comments or any questions, and y'all have a nice day.